Welcome to Inside the Deal. I'm Kathleen Flynn, and I'm here with Michael Stark, who is the co-founder of Crosslink Capital. Michael, I want to get into some issues about how the economy is affecting investing. But before we do that, let's just talk about Crosslink Capital. What do you guys do and how your investment model is a hybrid?
The professionals at Crosslink Capital are experts in growth companies. Growth comes from all kinds of different places. It can come from Hewlett-Packard and laser printers. It can come from a small startup like Google who becomes a large company. So what we're trying to do is capture the best areas for growth companies to emerge into and invest in those at all stages. So we birth companies at the seed stage, but we also invest in them in a passive sense in the public market. We believe the IPO is only one day in the life of a company. Really not all that much changes in these companies. And so we understand how these growth companies operate, how they grow very quickly, how we can help them grow quickly in venture capital and invest in them passively in the public market.
Well, let's talk for a minute about that hybrid model, how you're doing both in the public markets and venture capital, and sort of what's the division of labor almost?
Well, in our firm, most everyone is bilingual between venture capital speak and public market speak. So people have the ability to do both in our firm. But we do more or less have a public team, we have a venture team, but then we have teams around new areas like alternative energy in both public and private, and consumer video. We have a team that just does that. So it's kind of a hybrid model, you could think of it as.
What's the breakdown in terms of money? How much are you investing in the public markets versus in private companies?
We manage about $1.3 billion, and it's almost 50% in each venture capital and in public market.
So obviously it's a very volatile time economically and in the public markets. How are you coping with that, and how do you limit the risk?
It changes by stage of investment. So early stage venture capital, totally unaffected by this. That's a long-term business. We're working with entrepreneurs in our residence, not in our residence, to develop companies. Later stage venture capital, where it's priced off the IPO market, we think valuations probably go down there before they go any higher. In the public market, we go both long and short, so we're somewhat hedged there. And it's a very volatile time, as you mentioned. And we're basically pretty long-term investors, and we stay with basic core ideas and what the right ideas are, and we go up and down a little bit in that type of environment.
You said that early stage venture capital investing is unaffected.
Right.
Do you think that's going to continue?
Yes. Our time horizons are long. It takes us 5 to 10 years to get a company up and to be on the public market or cash flow positive. And we can't predict market cycles that well, and we're in a bad cycle this calendar year. But last year was pretty good, and we hope the end of next year will be good too.
To what extent then do you focus on potential exits? I mean, are you looking for the turnaround of the IPO market?
Eventually, yes.
Good, I think we all are.
But probably not going to be this year. We think the IPO market will come back. It will be like last year's IPO market, which was primarily for larger, more mature companies. Because there's been changes in the capital markets that have occurred over the last 10 years that says you got to be a little bit bigger and bulkier to be a public company today.
As a venture capital arm, or in the venture capital arm, how are you looking at the exits opportunities? I mean, how does that affect and change the investment strategy that you have?
Well, we have a belief that if we build unique, successful companies, there will be exits for them. People will buy them, or there will be IPOs. So, and I don't think that's really changed in this environment, even though it's short-term very, very negative.
Okay, and before we let you go, give us a sense of what you think the best opportunities for investors are now.
We think the energy market is very interesting. The whole energy technology, alternative energy market is very interesting. We think there's a transition to advertising happening where the money's going off the television into the internet and other places. And we think information technology is changing to go from in the data center of a corporation to outsourcing that to different facilities. Software as a service is an interesting area for us as well.
All right, thank you very much, Michael Stark from Crosslink Capital, and thank you for watching Inside the Deal. I'm Kathleen Flynn.